Tripling your money sounds amazing, right? Most people would be thrilled with that. Turn $10,000 into $30,000 right off into the sunset. Game over. While tripling your investment is already a big win, some Fidelity index funds have gone way beyond that. I'm talking about turning steady, no-hype investments into six-figure, even million-dollar portfolios. In this video, I'm breaking down the 5 best Fidelity index funds to triple your money. Each one has a track record of strong, consistent growth, and they're a lot more powerful than most people realize. I'll show you a fund that pays over $60,000 in annual dividends, and in the end, I'm going to show you and John an index fund that will turn a $10,000 investment into a $1.3 million portfolio. That is a 1,300 times return. Now, I'm ranking these from solid to unstoppable because by the time we hit number 1, you'll see just how powerful these funds really are. So let's start the countdown. 5th on the list is Fidelity MSCI Industrials Index ETF, ticker symbol FNDX. This one's for the believers in the real economy, the builders, the manufacturers, the transportation giants. If you've ever looked around at airports, construction sites, or giant logistics warehouses and thought that's where the real money moves, then this ETF might be your kind of investment. The Fidelity MSCI Industrials Index ETF gives you exposure to a wide range of U.S. companies in the industrial sector, like aerospace, machinery, railroads, and delivery companies like FedEx and UPS. When economies grow, these companies are at the forefront, moving materials, people, and products. They ride the wave of recovery when markets bounce back. And they tend to perform well when infrastructure spending increases, which, let's be honest, is a growing trend worldwide. What really makes FNDX attractive for long-term investors is its balance between modest dividends and solid price appreciation. Its current dividend yield sits at about 1.49%, which isn't huge, but it's steady, and the dividend has been growing year over year. In fact, its dividend CAGR is 8.72%, which means the income you get from this ETF will snowball if you keep reinvesting it. On the growth side, FNDX has returned around 9.06% annually in share price appreciation alone. Okay, so now let's see what that looks like in action. Let's say John invests $10,000 into this fund today and reinvests his dividends. After just 1 year, his portfolio would grow to $11,055. Fast forward 10 years, and it'll be valued at $27,208, tripling the money in 11 years. Stretch it to 20 years, and John's portfolio will be worth $73,700. And by year 30, his initial $10,000 is projected to reach $198,779. Paying around $2,430 in annual dividend income. Out of that, $25,069 would come just from reinvested dividends and $163,710 would come from capital appreciation. So the total value added to the initial investment would be $188,779, almost a 190 times return. 4th on the list is the Fidelity MSCI Consumer Discretionary Index ETF with the ticker symbol FDIS. Now this one's a bit more fun. It's filled with companies we all know and love like Amazon, Tesla, Nike, and Starbucks. These are the names people turn to when they feel good about their finances and want a little something extra. And believe it or not, those treat-yourself moments can turn into serious profits over time. What makes FDIS especially appealing is that it captures innovation, brand loyalty, and high growth potential all in one basket. These are the companies people love, and that matters. Although its dividend yield is on the lower end at 0.85%, the real magic with FDIS is in the capital appreciation. Over the past decade, it's delivered an average annual return of 10.68%. That's powerful growth when you let it compound. Plus, the dividend growth is solid, with a dividend CAGR of over 9.31%. So even though you're not getting a ton of income up front, the snowball effect kicks in fast once you hold for the long term and reinvest those dividends. So let's play this one out. Let's say John invests $10,000 into FDIS today and opts to reinvest every dividend. After just 1 year, his portfolio would grow to $11,153. By year 10, it would climb to $29,645, so almost tripling the investment around the 10-year mark. Push it further to 20 years, and it'll grow to $87,073. But after 30 years, his original $10,000 will turn into $253,697. Of that, $13,685 would come from reinvested dividends, and a solid $230,012 would come from price appreciation. That means a total value added to John's initial investment of $243,697, a 240 times return. Though the returns are good, there are even better options coming up here, including an investment fund that pays over $60,000 in annual dividends. And at the end, I'm going to show you and John an index fund that turns a $10,000 investment into a $1.3 million portfolio. That is a 1,300 times return. Third on our list is Fidelity Nasdaq Composite Index Fund with the ticker symbol FNCMX. If you're bullish on innovation, disruption, and the tech-driven future of the world, then FNCMX is a fund that needs to be on your radar. It gives you full exposure to the Nasdaq Composite Index, which means you're not just investing in the big names, you're investing in the entire tech ecosystem. I'm talking Apple, Microsoft, Amazon, Meta, and beyond that, hundreds of fast-growing mid-cap and even small-cap companies that are grinding every day to become the next industry giants. What sets FNCMX apart is how tech-heavy it is. While other index funds spread across sectors, this one leans into the innovation economy hard, and that's exactly what's powered its incredible long-term returns. Now, let's be real. The dividend yield isn't going to blow anyone away. It sits at just 0.65%. But this fund isn't about income, it's about building wealth through explosive growth. With an average annual return of 13.18% based on share price, FNCMX is one of those rare index funds that can seriously supercharge a long-term portfolio. And even though its dividends are on the smaller side, they've been growing steadily with a dividend CAGR of about 8.58%. Based on these metrics, let's say John invests $10,000 into FNCMX today. After 1 year, his portfolio would grow to $11,383 and will triple the return in around 9 years. After 10 years, it would climb to $36,142. By year 20, he'd be looking at $128,353. And by year 30, his initial $10,000 investment turns into $450,854. Out of that, $7,877 would come from reinvested dividends, and a massive $432,977 would come from capital appreciation. That means a total value added to the original investment of $440,854, a 440 times return. Now, what if you could get a bit of everything? The tech, the industrials, the healthcare, and even financials, all that with a good monthly dividend payout. For that, second on today's list is Fidelity Total Market Index Fund, ticker symbol FSKAX. This fund is like owning a tiny piece of nearly every publicly traded U.S. company. Large caps, mid caps, small caps, you name it. It's the ultimate diversification machine. While others on this list focus on specific sectors, FSKAX spreads your money across the full U.S. stock market. That means you're not just betting on tech or consumer discretionary or industrials, you're betting on America itself. And historically, that's been a winning bet. With an average annual return of 9.42%, FSKAX delivers steady, reliable growth. But what really makes it stand out is its strong dividend game. The current dividend yield is a healthy 2.17%, and the dividend CAGR is a monster 15.36%. That means your income compounds aggressively, especially if you're reinvesting. This ETF is perfect for someone who wants a core holding they can build everything else around. It's simple, it's powerful, and it doesn't require you to guess which sector will win next. You win with the market. And because of its broad diversification, it often weathers economic storms better than sector-specific ETFs. That's why this is the second best pick on today's list. So let's break it down. Let's say John throws $10,000 into FSKAX today and reinvests every single dividend. After just 1 year, his portfolio would grow to $11,159. After 10 years, he's sitting at $31,819, tripling his investment. Fast forward 20 years, and it's worth $123,192. And after 30 years, that original $10,000 explodes into $670,062, paying around $64,059 in annual dividend income, or about $5,338 every single month. Out of that, $316,680 would come from reinvested dividends and $343,383 from capital appreciation. So the total value added to the original investment will be about $660,062, a 660 times return. Now, all of this has built toward one final fund, the one that takes the crown. Topping the list is Fidelity MSCI Information Technology Index ETF with the ticker symbol FTEC. This is it, the king of the castle, the top performer. If you were wondering which Fidelity fund could actually triple in around 7 years and over the long run deliver over 1,000 times return, it is FTEC. It isn't just another tech fund, it's a laser-focused bet on the very backbone of our future. It gives you exposure to giants like Apple, Microsoft, Nvidia, and Visa, but also includes rising stars that are leading innovation in cloud computing, semiconductors, cybersecurity, AI, digital payments, and data analytics. In short, it tracks the information technology sector in the U.S., which has historically been the highest growth sector of the last 2 decades. Now, here's the thing. The dividend yield on this fund is tiny, just 0.55%. So, if you're chasing immediate income, this might not catch your eye. But if you're playing the long game, FTEC becomes an absolute rocket ship. Why? Because the price appreciation here is just on another level. Its share price has grown at a staggering average annual rate of 17.56% over the past 10 years. That's the kind of compounding that turns average investors into millionaires, not in theory, but in actual numbers. So as we've been doing, let's take a real-world look. Let's say John puts $10,000 into FTEC today. After just 1 year, his portfolio would grow to $11,811, tripling his portfolio around the 7-year mark. After 10 years, it shoots up to $52,094. Fast forward 20 years and John's portfolio will be worth $266,311. But by year 30, that original $10,000 explodes into a massive $1,350,596. Out of that, $6,344 would come from reinvested dividends, and an absolutely massive $1,334,252 from capital appreciation. That means the total value added to the original investment is $1,340,596, or a 1,300 times return. Want to know how to turn a $10,000 investment into a $3.5 million portfolio using ETFs? Click the video on the screen to find out.